Nvidia, it's still the #1 leader in chips, but its shares are indeed in a bear market. Well off its highs, it's down about 24%. So do you buy into the dip amid the GTC AI hype? My name's Jessica Amir, market strategist with Moomoo. Thanks for tuning into the weekly this Friday, the 14th of March. Well, first, let's start off with this. Benjamin Graham said, to be an investor, you must be a believer in a better tomorrow. With that in mind, we wanted to unpack everything you need to know about Nvidia, the world's third largest company. It's worth $2.8 trillion US, and it's the only chip maker in the world with over 50% of its revenue coming from America's biggest companies. It's growing profits at 72%, and its earnings are expected to grow at 55% next year and 26% the year after that. So let's just take a look at Nvidia's shares. They are indeed down 24% from their record all-time high that they last hit back in December last year. So do you buy into the pullback, believing Nvidia shares could rally as they traditionally do around this time of year? Ahead of their key AI summit that they do every year called GTC. Do you believe that history will repeat itself? Or do you believe the other scenario, that Nvidia shares could fall 57% like they did back in the first Trump trade war of 2018? Let's cover the scenarios and what you need to know. First, let's just touch on the fact that history may indeed repeat itself, and we could see a short-term rally on up in Nvidia around GTC. Please note that Nvidia shares generally do rally, and this is showcasing a feature for those that are tuning in on the podcast. This is showcasing a feature on Moomoo's app called Trend Projection. It's basically telling you that a little bit of a bottom has been seen in Nvidia's shares, and our AI functionality is suggesting that Nvidia shares are starting to rally up. And there's a good reason for this. It's because on March 17, Nvidia kicks off their biggest AI event of the year, Nvidia's AI conference, GTC, as we said. And it's where CEO Jensen Huang will give a keynote address. Other AI tech visionaries will also be speaking. Now, please note the other factor that I want you to consider is since 2016, we've seen Nvidia shares rally 26% in the first quarter of the year, really because events such as these key AI summits really often give a runway of what we can expect in terms of record demand for chips for the year ahead. And at GTC, not only Nvidia's CEO will be speaking, but we'll be hearing from many other tech leaders. Nvidia will also be hosting their first quantum computing event, and you'll indeed hear from some companies that we've been featuring on Moomoo that are some most traded stocks at Moomoo. Also note, taking a bigger picture, big step back now, at GTC, Nvidia could also highlight the undercurrent of semiconductor demand sentiment is indeed really at its beginning once again. Perhaps they'll map out, Trump's $500 billion AI project, Stargate, how that could play out. We're probably going to hear more about sovereign AI initiatives, reinforcing Nvidia's role in US tech. Plus, we'll probably hear about how Microsoft is really planning to spend that $80 billion that they said that they're going to spend on AI this year. What about Meta? We'll probably hear how they are going to explicitly be spending maybe that $65 billion that they said they're going to spend on AI this year. And of course, rounding it all out, remember Nvidia themselves, in their recent quarterly earnings, they showed that they have experienced unprecedented demand for their new flagship chip called Blackwell. They made $11 billion in Blackwell revenues, just outstanding, with Jensen Huang saying demand is continuing to outstrip supply. Obviously, that means prices are on a one-way street going up. And that's a trend that's been backed by Bank of America's 60% data center growth forecast for 2025. Another scenario for you to consider, as in where will Nvidia shares head next? Another scenario is that Nvidia could take a very big fall. Why? Well, it might need to adjust for earnings growth to fall amid the incoming tariffs that we've been speaking about a lot on our daily morning notes that we've been bringing to you on YouTube and on platform podcast terminals such as Apple and Spotify. But please note, look, throughout history that Nvidia has taken a big hit, but its shares have always recovered and hit new record all-time highs. The chart that we're showing for those that are listening in on the podcast basically highlights how Nvidia shares have performed since 2021. And what we're highlighting here is that Nvidia shares have fallen really hard 19 times. On average, a big pullback has averaged 14% from peak to trough, but the clear trend is that Nvidia has always recovered and then later hit a new record all-time highs. But really worthwhile pointing out, we are highlighting this chart here for those that are tuning in online on the podcast, that the biggest drop that we've seen in Nvidia was the fall of about 68% from 2021 to 2022. And then recently, last year, there was a fall of about 33% in 2024. So why was that? Well, obviously the recent one was amid the Japanese carry trade unwind. And then the 2021-2022 pullback, that fall of over 60%, that was all about rising interest rates and a slowdown in Nvidia's earnings. But please note, although Nvidia shares did fall significantly, 60%, Nvidia shares then recovered and hit a brand new record all-time high 9 months later. So that simply shows you that Nvidia does have a history of not only rebounding, but why is that? It's all about delivering strong earnings recoveries, strong earnings growth, strong cash flow growth, and that is why you see inspired share price growth. And of course, remember, as I always say, earnings growth leads to share price growth, and indeed that's one of the wonders of the world. Another scenario, the third scenario, perhaps the most bearish of them all for Nvidia, is what if you buy into the dip and you get it wrong? And of course, what if history repeats itself like 2018? So what happened in 2018? Well, we saw tariffs come in on China and on US chips. And we've seen 50% of these scenarios play out now, but we're still, of course, waiting for tariffs on chips to take effect. So what if history does repeat itself and you did buy the dip and get it wrong? Well, it's probably going to dent earnings only temporarily, but let's just highlight this chart here. What if you bought into the 2018 trade war crash after Nvidia had dropped 28.5%, similar to the pullback we're seeing now, and then you saw Nvidia fall again another 28.5%. Well, you might feel pretty dumb, and some of your friends might be telling you, hey, Nvidia shares are down 57% from a peak to a trough. But I would encourage you to say, if you took a long-term view and if you bought halfway into the pullback, you would have made 1,030% if you held those shares over 5 years. So if you invested $10,000 and bought into the pullback, you would have made $103,000. With that in mind, there's a lot to be said about the words of billionaire investor Shelby Davis, who's a friend or was a friend of Warren Buffett, and he said that you make most of your money in a bear market, you just don't realize it at the time. So there's a lot to be said about buying into a pullback and taking a long-term view and letting the power of compounding earnings growth and returns let it do its work. And that's the weekly. Thanks so much for your company from all of us here at Moomoo. Have a wonderful, safe and happy weekend, and we'll see you back on Monday.